Coming up on Business Incorporated. Report by Economist Intelligence shows China aims to surpass EU's trade with Africa in a decade. And Food Export Council shows Egypt's food exports rose by $51 million during the first half of 2022. Plus, gloomy China economic outlook cools U.S. stocks rally with futures in the red. Hello, welcome to the program. Now we'll begin with market numbers right here in Africa. We see Nigeria's NGX seems to be settling below the 50K level. This time it's down about 0.13%. Right there, it's down in South Africa, GSC, holding that 70,000 level there, marginally down by 0.04%. Let's flip over now. We see trading day in Africa, we see Egypt there. It's down 0.77%, almost 1%. And we see Kenya, we're going to get those election results later today. And we see it's down Friday, close negative there, down 1.30. Let's move on now to the Middle Eastern markets. We see Abu Dhabi. Abu Dhabi is down 0.44% at intraday. Dubai, the lone gainer at intraday, it's up by 0.08% marginal. Hopefully it closes in the green. See other parts of Middle East there. Saudi Arabia index there is down 0.23%. We see Qatari index, 13,699 points, down 0.70%. That's what we're seeing in the Middle East right now. Let's move on now to Europe, as earnings for energy companies keep soaring amid an economic and energy crisis. Germany's finance minister says the country should abstain from taxing these profits, like other countries in Europe. Let's have DW's Chris Koba to tell us more. Great to have you, Chris. So why does Germany's finance minister oppose, taxing these earnings?
Christian Lindner claims that such a levy would offer up the German tax system to arbitrariness. That's why a lot, if not everything, spoke against a possible excessive profit tax, Lindner told German broadcaster ZDF. And he touches on a point that some economists have made out as the toughest argument when it comes to such a windfall tax: the question of what is an excessive profit? How do you define it? Where should governments draw the line? Which sectors should it apply to, and which should be spared? And if so, on what grounds? Are other issues of concern here. Now, Mr. Lindner argued that producers of COVID-19 vaccines, for example, were rightly reaping high profits because their risks had been high in trying to battle the pandemic. And we have to understand that for the finance minister, there are political considerations at play here as well. Christian Lindner is the head of the business-friendly Liberals, which by nature are against higher taxes, and which have been under particular pressure recently as they've been voted out of government in two recent regional elections. And polling on the federal level looks grim as well. And introducing another levy could only worsen this trend. That might be part of the thought process behind Christian Lindner's stance here.
Yeah, quite interesting, all about the windfall tax at this time. But what's the sentiment with the government regarding this?
No, it is not. While Chancellor Olaf Scholz of the Social Democrats says imposing windfall taxes would be challenging but not impossible, Economy Minister Robert Habeck of the Greens has repeatedly demanded that, what he says, unearned and by chance profits must serve society, not individuals, meaning that energy companies in particular should be paying higher taxes in order for the state to have more financial power to support those struggling with rising costs. Italy and Britain are among those to introduce windfall taxes this year on energy firms, with Britain charging a levy of 25% on oil and gas producers' profits since May, to help fund support for households. Supporters of the idea claim that energy companies, unlike vaccine producers, have indeed not been facing higher risks to their business, but were profiting from market distortions. And this disagreement on a windfall tax is just another point on the list of things that the three-party coalition in Berlin seems unable to find common ground on in the most recent past. Other issues including the question of whether a lifetime of Germany's nuclear power plants should be extended, or what financial and social support for those in need should look like during this time of crisis.
All right, Chris, but how are the markets looking at this time?
There's pretty upbeat sentiment across European markets. Concerns over high energy and commodities costs, as well as inflation figures being way off from central bank targets, seem to have moved out of investors' focus. There is some concern over the state of the Chinese economy, though. The central bank, they are slashing key interest rates in a surprise move earlier today, as a raft of data showed weakness in the world's second largest economy. But those issues don't seem to be something that could reverse the trend on German markets. After advancing 0.7% on Friday, Germany's blue chips index DAX is gaining 0.4% in the early parts of today's trading session.
All right, Chris, thanks for that. We'll be watching how the market closes today. Thank you so much. That's Chris Koba right there in Berlin. Let's head on to London now. We have Juliana standing by right there. Great to have you, Juliana. So, analysis by the Institute of Fiscal Studies saying the government needs to spend about £12 billion to maintain the scale of support pledged to help families cope with the cost of living crisis. Can you tell us more about this?
Yeah, good afternoon, Laddie. Well, lots of financial institutions like the influential IFS, as well as charities, have been crunching the numbers over the past couple of weeks because, of course, the cost of living crisis is dominating headlines. You can't, switch on the TV or open up a newspaper without everybody shouting about it. And the IFS have said if the government are to produce similar support measures that were introduced in spring just before all hell broke loose and Boris Johnson resigned, they would have to set aside £12.5 billion. And this is just to help struggling families. And I think it kind of goes further to what we've heard this morning by the Labour leader, Sir Keir Starmer, who's been setting out the Labour plan for what to do with this crisis. At the moment, the energy price cap is set to £1,900 or so a year. So that means that energy companies cannot charge customers more than that. That's, of course, expected to double in the autumn and to treble in January. And now what the Labour Party are asking policymakers to do is to freeze that price cap. So basically what everybody in the UK is paying now, you should be paying for the next year. Now that plan is going to cost £29 billion, but no surprises, it's received widespread support. According to the Times newspaper this morning, about 3/4 of Conservative Party supporters back that plan. And that's really because we haven't seen much. We haven't heard anything from the Conservative Party. We know that Parliament is in recess at the moment. Nobody's sitting. Most people are getting, their suntans topped up in Europe. In fact, there was a couple of pictures over the weekend of the Prime Minister in Greece shopping for bread at a time when people are saying he should be trying to get the country through this issue. They're saying that he's presiding over a zombie government at the moment, and that's because last week, even though there were crisis talks with energy bosses, he doubled down on his statement saying, I'm not getting involved until my successor is announced on the 5th of September. At the moment, Liz Truss, Rishi Sunak offering different things, but no windfall package, which is what the Labour Party are offering. But let's see, they did a U-turn famously for the windfall tax. Hopefully, and we really are all crossing our fingers because it is bitterly tough in the UK at the moment, they will back Labour's plans and freeze their energy price cap so people can breathe again and rest assured that their children can be fed comfortably during the tougher winter months.
And still looking at the cost of living crisis, the UK government also announced that train fares won't rise. They'll rise lower than the inflation rate. How's that going to work?
Well, yeah, so traditionally, if you're in the UK, you wake up on New Year's Day and not just with a soaring headache, but also hearing that train fares have risen. That's how it's been for years and years. But now, of course, cost of living again, inflation 9.4%, expected to rise to about 11%, possibly 13% by the new year. And because of those gloomy forecast figures, the Transport Ministry have said that they are going to delay this rise in travel fares from January until March. So it's been postponed a couple of months, but also it will not rise at the level of inflation. At the moment, train fares don't rise on CPI, consumer price inflation. It goes by the retail price index, which is much higher, but it isn't going to be as high as the RPI will be. It will be much lower than that. And I think consumers may breathe a little bit of a sigh of relief because at the moment, the rail network, train network system isn't functioning as we would like it to be. There was industrial action on Saturday, I believe. There are going to be 3 further strikes this week. On Thursday, it's going to be the rail. Saturday, on Friday, Thursday rail, Friday tube, Saturday rail. So there's going to be lots of industrial action. Of course, we know workers are not happy. Wages are stagnating. They're not happy with conditions. So there are many, many issues affecting transport in the UK at the moment. So the fact that people aren't going to be having to pay through their teeth for this is going to be good news.
Quite interesting. Well, consumer confidence quite low right now in Europe. About how the market's looking?
Yeah. Quite gloomy, unfortunately. There's so many domestic issues that are fretting investors at intraday, and this is obviously clearly being exposed on the markets. The all-share is down 0.06%, the FTSE 100 down 0.09%, but the FTSE 250, the domestic market, slightly up. I think this has been some positive company news data. That's up by 0.09%. In the currencies market, the British pound is continuing to trade down against the US dollar. It's down by 0.46% against the dollar, although it's trading up against the euro by 0.09%, but down against the Japanese yen by 0.41%, Laddie.
All right, Juliana, thank you so much. Enjoy the rest of your day.
Thank you,
All right, now let's take a look at other markets now. We see Asia-Pacific markets mostly higher today as investors monitored market reaction to Chinese economic data. Many Chinese markets were mixed. Shanghai Composite fell slightly to end the day at 3,276 points, and the Shenzhen component was up about 0.33% at 12,460 points. Hong Kong's Hang Seng Index was 0.72% lower, and the final of trade in the S&P ASX 200 in Australia rose 0.45% to close at 7,064 points. MSCI's broadest index of Asia-Pacific shares outside Japan were 0.21% lower. Japan's Nikkei 225 increased 1.14% to 28,871 points, while the Topix index added 0.6% to 1,984 points. And over to the U.S. now. U.S. equity futures were lower today, putting Wall Street on track to take a breather after another positive week as traders brace for big retail earnings. Futures tied to the Dow Jones Industrial Average fell 149 points, or 0.49%. The S&P 500 futures was down 0.48%, and the Nasdaq 100 futures dipped 0.30%. Monday's move comes after disappointing economic data out of China overnight. Country's central bank also cut rates, unexpectedly raising concern over China's economic recovery. Last week, the S&P 500 bounced 3.52% to notch its 4th positive week in a row, and its longest winning streak since 2021. The Nasdaq Composite ended the week 3.08% higher. Also, for its 4th straight week, the Dow added 2.9%. And Nigeria's headline inflation rose by 105 basis points in July to 19.64% year-on-year, jumping from 18.60% in June year-on-year. This is the highest print since September 2005. Food inflation increased to a 14-month high, rising by 142 basis points to 22% year-on-year. Pressures were most significant in the prices of bread and cereals, food products, potatoes, yam, and other tubers, meat, fish, and oil and fat. On a month-on-month basis, food inflation increased by 2.04% relative to the 2.05% month-on-month recorded in the previous month. Similarly, the core inflation rose by 51 basis points to 16.26% year-on-year. That's the highest level since January 2017. Notably, the highest increases were recorded in the prices of gas, liquid fuel, solid fuel, passenger transport by road, passenger transport by air, garments, cleaning, repair, and hire of clothing. Compared to the previous month, the core index advanced by 19 basis points to 1.75% month-on-month. We're going to break now. When we come back, more stories from the African continent. Just stay with us. This is Business Incorporated. All right, now to our next conversation. The stock market in Nairobi reopened Wednesday after the general election holiday with a gain of 31.8 billion shillings as preliminary results showed a tight race between opposition leader Raila Odinga and Deputy President William Ruto. Let's talk to Mercy Milanoy. Join us right there, business journalist. Great to have you, Mercy.
You will.
Yeah, so Mercy, how the elections, I know the results are supposed to be out soon. How's it looking?
Well, it's quite a tight race between, of course, the two contenders, the two candidates, that is William Samuel Ruto and, of course, Raila Odinga. And as we speak, most of the leaders, including William Ruto, are at Bomas of Kenya, which is the location where we are expecting the IEBC, which is the Kenyan Electoral Commission, to give us the final results and tell us who will be the president of Kenya for the next 5 years. So that event is ongoing at the Bomas of Kenya, and we're still waiting. I have a split screen here, and I'm seeing still the commissioners and also the chairman, Wafula Chebukati, of the IEBC is yet to arrive. But most of the competitors who are there, the candidates are there, and of course even the new elected leaders who are members of parliament, women representatives, senators, governors also present. So we are still waiting to hear from the chair of IEBC, Wafula Chebukati, to tell us. As of now, we still don't know.
Quite interesting. But what's the general mood like over there?
Well, actually, Larry, this has been quite impressive for the 2022 elections. It's been quite peaceful. Of course, the turnout for voters was a bit low compared to 2017. But in terms of peace, in terms of just cohesion between people, it's been quite peaceful. Of course, now, as it is expected, people are already on the streets, they're already on the road celebrating. Whoever is supporting either is already on the road supporting. On social media, from both camps, from Ruto's camp, from Raila's camp, all saying they have won. But it's quite a somber mood.
Mercy, can you hear me? Okay, seems Mercy got frozen there. We'll try to get Mercy back. She was telling us about the mood in Kenya right now, saying it's quite exciting. Mercy, if we have you, you can continue.
Yes, can you hear me?
Yes, I can hear you now. You can carry on.
Yes, so the mood is just quite somber, and of course, we're just waiting. We've been anxious since Tuesday when we voted. So as of now, we are still waiting, and we're just waiting to hear from the chair of the Electoral Commission to tell us who has won this year's election.
Quite interesting. We'll be looking out for that update. But bringing the conversation now back to the local boss there in Kenya, quite an impressive addition there, about 31.8 billion shillings added. How are investors, seeing all of this?
Well, I think first, investors were also quite waiting for this moment. And of course, from the analysts we've spoken to and a few players in the Nairobi Securities Exchange, is that they had already put in measures in place, and of course they were anticipating for these elections to come. But what has been quite outstanding this year's election is how the market has responded. Considering from last year, we can just look at some of the top players in the NSE, including Safaricom. Last year, they were trading at 24 shillings per share, which had fell by 4.9% during the elections period. This year, these elections, you're seeing them gain, and one share is trading at 30 shillings and 45 cents, and has gained over 34 billion Kenyan shillings, which is the same story with Equity Bank, which is also one of the region's largest banks, East African breweries. And so most of the key players in NSC are really quite, they are posting gains during this time, which is quite impressive. And of course, even from NSC, records show that 63 listed stocks have also have pushed the market share to almost 2.26 trillion shillings, which we've not had since May. So this year, I think we have a bit of investor confidence, and of course, even the government assurance over and over again that these elections will be quite peaceful. And also, I think for the investors, they were quite ready to see what will happen, and of course, just be on the lookout and see how the market is. But this year, Ladi, for these 2022 elections, the market has really responded well. But I think also it's the measures that have been put in place to ensure that there's peace. If you look, the elections have been quite peaceful, also with the campaigns. So also the events that have happened before the elections, the campaigns and the mood have really helped to keep investors confident. We've had quite peaceful campaigns. There has been a bit issues on there, but nothing major to report home about. So I think also the events towards the elections have also quite helped the market to ensure that there's confidence, also to just help investors have confidence to continue investing. The other interesting thing also from the market is that in 2017, when the Supreme Court of Kenya annulled the elections, you find that we had like half an hour of zero trading, which made the market tumble by more than 10%, which is not what we have seen this year. So I think from what we've seen from the campaigns, they've been quite peaceful and quite sober, and also towards the elections, the same has been happening. So we're hoping that at least the market will continue being confident with us. Yeah,
it'll be quite interesting to see if the market actually continues, with this uptrend, even after we get the results. We'll be watching out for that, because it was on a downtrend for the longest time. I was wondering what could be that catalyst. So I guess this was it. All right, Mercy, thank you so much for giving us your perspective today. We'll be looking out for those results.
Thank you.
All right, now let's check other stories now. The Africa-China relationship is moving into a new phase with the latest policy initiatives, development strategies, and financial pledges as tools for enhancing deeper and broader engagement by 2035. This report by Economist Intelligence shows China aims to push the trade from medium to long term over the next decade, trying to outdo major international powers such as the US and European Union. The Asian economic powerhouse is targeting sectors such as information and communications, infrastructure and services, agricultural ventures, consumer goods, electronics, light manufacturing, and finance. And Egypt's exports of food industries grew by 2.4% to 967 million Egyptian pounds during the first half of 2022. That's according to the monthly report from the Food Export Council. The FEC's chairman says the value of food industries exports registered $2.169 billion in the first half of 2022, compared with $2.118 billion in the same period in 2021. The exports in January 2022 recorded $307 million, which is a 15% growth compared to the same month last year. According to the statement, Saudi Arabia ranked first place with a value of $198 million in exports, an increase of 25%, followed by the USA, received value of $148 million with a growth rate of 31%. And new loans advanced by banks in the first 6 months of 2022 accounted about 24.6 billion Ghana cedis, an increase of 54% over new advances recorded in the same comparative period last year. According to the Banking Sector Development report by the Bank of Ghana, the year-on-year increase in gross loans and advances recorded in June 2022 reflected mainly development in the first half of this year. Stock of gross loans and advances increased by 33.3% to 63.4 billion Ghana cedis at the end of 2022, compared to the growth of about 5.7% in June 2021. The stronger growth in gross loans and advances in June 2022 reflected in both the private and public credit. And that's it on Business Incorporated. Thank you so much for watching. I'm Ladi Williams. Bye for now.